Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, Hollywood mogul, the man behind Shrek, Jeffrey Katzenberg, on the next big thing in entertainment.
I do think that there is a next big opportunity that is going to come in media, driven by AI.
But for now, he is focused on tech and security after closing $460 million at a fund he founded with the former CFO of Dropbox, Sujay Jaswa.
Since the beginning of WndrCo, about 2/3 of our investments have been in software. And I don't think that's going to change going forward.
And we're at the CNBC CEO Council in Washington with Deputy Treasury Secretary Wally Adeyemo. He is just back stateside after a trip to Ukraine. What he's asking CEOs to do to interrupt Russia at war.
To all of these CEOs across our coalition, that what we need you to do is to pay more attention to your supply chains and also to the banks that you're working with.
Plus, Paramount close to a deal with Skydance, another new AI chip, this time from Intel, and memes, always memes.
It's a brave new world. It's the wild, wild west in terms of pump and dumps.
It's Tuesday, June 4th, 2024. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is on assignment at the CNBC CEO Council Summit in Washington. He's going to be joining us a little later in the show.
The Dow looks like it's top heavy. I don't know. It was down over 400 at one point yesterday. It closed down 115.
Yeah.
So in
it's
last
seen
week,
weakness in the last week.
The last week it was down, even though it was the weakest average for the month. It was up for the month, but it's been pulling back a little. It was 40,000. We had our 40,000 hats.
They've had a few Dow components that have had issues. Last week it was Salesforce.
United Health. That's Salesforce again yesterday.
Yeah,
again United Health.
Boeing that's had troubles and that's been struggling. But
UNH.
I think if you're still looking at it, you're still looking at the Dow that's less than 5% or right around 5% off of its all-time high.
But our 40,000 would put those hats away. Another day, another new AI chip. Intel announced its new Xeon 6 processors during the Computex conference in Taiwan.
As we look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade.
It's a day after similar announcements from NVIDIA and AMD. Intel said its new offerings are designed for greater performance and power efficiency for data centers. Intel also unveiled pricing for its Gaudi 2 and 3 processors, and that came in below rivals. Those processors are used for AI model training as well as deployment. $30. That's the one we put all our money on in the CHIPS Act. One of them.
All your chips on, so to speak?
Yeah, all our chips on. We'll see whether that was a smart move or not.
Yeah, year to date, down almost 40%.
That's where it was. I looked at it the other day when we were talking about it. You can go.
What's market cap?
I mean, it's like, well, market cap's down much lower, but if you can go back like 15 years, I think, and see a similar number. I don't want to just say it off the top of my head, but I looked at a chart last time, and it's like it's been dead in the water for a long, long time. I don't know. Been through a series of CEOs.
Yeah, 130.
Through a lot of different CEOs. Let's see, you can go back to, doesn't go back far enough, at least August of 2014, it was $30 back then. So that's 10 years. I think you can go further than that.
Take a look at the meme stocks this morning. This is something we're doing on a daily basis now. The move that you're seeing today shows losses, slight losses across the board. These are only 1%, 2%, 3% losses. It does come after a 21% gain for GameStop yesterday. That was sparked by a post from Keith Gill, otherwise known as Roaring Kitty, who posted a screenshot of GameStop holdings that appeared to show a large position in that stock and options as well. He posted another screenshot after yesterday's close showing the same holdings, although we should caution that CNBC could not independently verify that the post was made by Gill or that the holdings are authentic. This morning, GameStop shares are down by about 1.4%. In the meantime, E-Trade is considering telling Keith Gill he can no longer use its platform after growing concerns about potential stock manipulation. Sources told the Wall Street Journal that Gill bought a large volume of GameStop options on E-Trade shortly before he reignited a meme stock craze back in May. The report says that E-Trade and its owner Morgan Stanley are concerned about Gill's ability to pump a stock for his own benefit. The Journal also said that the options trade sparked internal discussions at the SEC about whether they could be considered manipulation. Andrew Left of Citron Research, who was burned by his short position in GameStop in 2021, now tells Bloomberg that he is once again short GameStop. He also announced a short position in GameStop back in May, and he said he covered that position and then reshorted the stock again yesterday. In a tweet, he said Keith Gill's posts this week appear more like manipulation without a solid investing thesis. And he speculated that someone is backing Gill financially.
The stock opened at 40 yesterday.
Yeah.
So it closed up 5 at 28. It's not doing much this morning, but it was at 40. Where it opened and then went all the way down 12 points. But we talk, it's a great gig, and the people on Twitter immediately say, "Oh, Warren Buffett, he bought." It goes up. It doesn't go up 80% after he announces something, or anyone else who comes on.
And by the way,
you might announce that you own something, and that may boost the stock a little bit. You don't get to buy, 100 options and quadruple the underlying stock so that your options, he's got a paper, if that's true, what we see with Keith Gill is $85 million profit in like a couple of hours.
Days.
Yeah.
It's a situation where those Reddit forums where the meme stocks were really big back in 2021, and this was where all that was taking place. On Reddit, there is a lot of pushback. I don't know if you saw Kate, who came up with the story yesterday, showing how some of those moderators are pushing back, saying the people in those forums are the ones who got left holding the bag when everything was
every time
done.
Someone, there's someone that's on the other side of all those trades. If you are Keith Gill, it's great that you have followers that do that, but it eventually gets to the point where, I don't know. It's new. It's a brave new world. It's the wild, wild west in terms of pump and dumps.
I understand the desire to go after the short sellers. That I get.
Why?
But just because if you feel like, okay, we're going to do something about it. We're the people. I understood that movement when they were doing it. But what he's doing, if this is the case, is leaving all of his followers to be the ones who are left cleaning things up.
Should the short sellers been penalized for shorting Blockbuster?
No. Not at all. I don't have any problem
is
with
GameStop to have a viable future? And that's what Morgan Stanley said. What's the underlying rationale?
I can understand Elon Musk's frustration when you've got Tesla shorted, and he's saying we're trying to survive, trying to do something right.
Tesla's different than the meme stocks. Tesla actually is. What's the bullish scenario for GameStop?
I don't know. Maybe they figure out a way to really do what Foot Locker has done.
It's based on squeezing the shorts. That's all it's based on, isn't it?
I think so, yes.
Yeah.
But I think there could be some underlying thing. I don't think that makes any sense at this valuation, but there could be some underlying way of making it exciting to go back into the stores, because you're not going to be people buy games now online. They download these things. So unless you have a great place that people want to come and gather and you change things, I think Mary Doan's doing a great job at Foot Locker.
Reminds me of Eat to Rich almost, and Occupy. These are fat cat hedge fund guys that have naked shorts, and they deserve to, take it up the, up the nose.
Yes.
And it's a cultural movement almost, but it doesn't mean that there's any rationale for why these stocks would be.
No, there's not. There's not.
Well, why does he call himself Deep Effin' Value?
I know, you're the one who wanted Effin as a middle name for Richard Bernstein.
It is his middle. I thought about, if I have any more kids, which Rupert got married.
I saw.
Starting a family. 1993. Paramount and Skydance have agreed to terms of a merger. David Faber reports that a deal could be announced in the coming days, but still needs the sign-off from Paramount's controlling shareholder, Sherry Redstone. Among the terms of the proposal, Redstone would receive $2 billion for national amusements, and Skydance would buy out nearly 50% of Class B Paramount shares for $4.5 billion. Skydance and Redbird Capital would contribute $1.5 billion in cash. to Paramount's balance sheet to help reduce debt. And following the deal, Skydance and Redbird would own 2/3 of Paramount, with the Class B shareholders owning the remaining third. Should have sold it 5 years ago for $40 billion, and none of this would be, we wouldn't be like struggling through these details.
Shoulda, coulda, woulda.
Shoulda, coulda, woulda, but they didn't.
The state of New York plans to prohibit social media companies from using algorithms to steer content to children without parental consent. The legislation is aimed at preventing companies like Facebook and TikTok from serving automated feeds to minors. Critics have said that the feeds lead children to violent and sexually explicit content. It would also prohibit platforms from sending minors notifications during overnight hours without parental consent. That bill is still being completed, but it is expected to be voted on this week by New York State legislature. The governor, Kathy Hochul, said that the measure would make social media less addictive. California's legislator is considering a similar measure. And Joe, we've been dealing with social media for more than 20 years now that it's been on the scene. These rules, like 2004 was when Facebook first hit the scene. So these rules have been in the works for 20 years. Legislation is behind all of these things. I'm just reading the story in the Wall Street Journal today about how AI is now jumping into this picture, using fake nudes, where you take somebody's face and you stick it on a nude body, and even though these are fake images and almost everybody knows they're fake, they look at the teenage girls differently afterwards. They think, they
I saw that story.
And so we jump ahead to AI before we've even dealt with the social media issues that have been brewing for 2 decades.
I saw that story, and I mean, you can't tell, I mean, bodies aren't that different, so that it really makes no difference whether it is the actual or whether it's just someone else's.
Questioning their
it's the
morals.
same thing. But yeah, it doesn't matter that it's not their body, because it's close enough to where it looks like the so I don't know what
but you can put yourself in that situation as a 15-year-old or something.
Yeah.
Trying to imagine what's being
I don't
dealt
want to
with
see
this.
myself.
But to have that out at such a vulnerable time. So we've moved on to the next technology before we've even figured out how to deal with some of the social ills of the last one. And again, I'm not saying that social media is terrible. There's lots of great things that come out of it. But it has certainly impacted teenagers in this country, and I think led to anxiety levels, and we're not doing anything about it.
Right. And you wonder a lot of society's ills, and you don't want to just say it's all social media, but
it's not. But it's amplified.
In a large part,
it's amplified.
That's why we're in this crazy world.
Cheese will be next.
Coming up, the Hollywood mogul who left Walt Disney Studios to start DreamWorks. After producing Shrek, Spirit, and many others, Jeffrey Katzenberg tried and famously failed to launch short-form video platform Quibi. But these days, the entertainment exec is focused on tech investing at his firm WndrCo. Katzenberg might be holding off on media investments for now, but he's waiting for opportunity to strike.
I'm most interested in what's the next thing going to be, and that's where I think generative AI is going to be a huge factor in that, and is going to create an opportunity, a new democratized type of storytelling, and therefore a new platform for it.
The famed creative Jeffrey Katzenberg weighs in on TikTok, the Paramount-Skydance merger, and so much more right after this on Squawk Pod. You're listening to Squawk Pod.
I'm Becky Quick along with Joe Kernan. We're going to get to Andrew Ross Sorkin in Washington.
I told you, Andrew, it just smells. That's too much money to be able to make from just, posting a reverse Uno card or something, $85 million overnight.
And I think actually that issue may come up here in Washington. I'm at the CNBC CEO Summit in Washington, D.C. this morning. A big focus here for executives gathering is the 2024 election, which we'll talk about, how to integrate artificial intelligence and technology, and, as you might imagine, regulation, which I think is going to play into all of this as it relates to Roaring Kitty and so much more. So a lot going on here in Washington as this lobby starts to fill up with CEOs.
Hollywood mogul Jeffrey Katzenberg announcing this morning that his WndrCo venture fund raised $460 million. The fund's not focused on media, but on cybersecurity, the future of work and consumer technology. And joining us right now is Jeffrey Katzenberg. He's the founding partner of WndrCo. He's also the co-founder of DreamWorks and the former chairman of Walt Disney Studios. Also, Sujay Jaswa, who is founding partner at WndrCo and the former CFO at Dropbox. And gentlemen, welcome. First of all, congratulations. It's a pretty huge amount of money to be raising.
Yeah, and certainly, in this environment, it's with a challenge, but excited to have it behind us. And we have a great group of LPs, and it's actually really sort of become a very exciting time to invest again. I think,
so?
Well, I think, if you look back in, 2022, 2023 were challenging times. In tech, for sure. But we've just seen the first 5 months of this year have been a real sort of uptick, and the quality and the quantity of opportunities coming our way today is really, really significantly better. So it's exciting time. And I got a great partner.
Let's dig in a little more deeply to what you all are investing in. We'll talk about media later, but let's focus on what you are looking at. And Sujay, we've had a number of venture capitalists who have come in and said that valuations are really frothy when you start looking at AI. You guys are looking at cybersecurity as one of those areas, though, and maybe that's a place where you're finding some better deals?
Yeah, well, cybersecurity, there's a tremendous amount of opportunity. It's been an interesting 15, 20 years because while the world has changed in so many great ways with the internet, at the same time, the idea that all of us are more vulnerable online has become what's happening to children, what's happening to the elderly. I mean, it's shocking.
It
so,
is.
That's something that we've decided we want to take a hand in pursuing.
Is very specific on consumer cybersecurity. Obviously, cybersecurity is a huge, particularly for enterprise. We see all sorts of investments there, but we have focused and really become the leading firm in consumer cybersecurity. How do we protect you, your family, online, your kids, your parents? So it's unfortunately, it's a tsunami of challenges for every single one of us today.
What are some of the companies that you all are focused on, things that maybe we haven't heard about before?
Well, Aura, A-U-R-A, is a company that we helped get off the ground a number of years ago. And at this point, I think it's pretty much the leader in helping families protect themselves online. It's a comprehensive solution. In fact, today we're announcing a major initiative towards helping families protect their children in terms of understanding, what's the impact of social media on children's mental health. For example, if your 13-year-old is downloading calorie tracking apps, you probably have an eating disorder coming your way. Things like that are.
Those don't work. No, I'm kidding.
They may not work for actually losing weight. I'm living evidence of that.
That's what I'm saying.
I looked at, and then they help.
If you sign up just to get like a plan every month, I'm like, oh my God, it's happening every month. You have to cancel that. I'm telling this is TMI, but it doesn't work.
Well, it costs you a lot of money, and it just reminds you all the time that there's something wrong with you. Yeah. Which is really not what you want happening to a teenager.
I've got my co-anchors.
We've talked an awful lot about that, just what happens to teenagers in particular. And then this morning, the Wall Street Journal has this story about AI. We haven't even solved the problem with social media yet. And here we are facing new problems with AI and fake nudes created by
Well, here's one of the crazier scams that's happening is basically someone will create that and say, I'm going to send it to all of your school friends if you don't send me $10,000. And it's a 15-year-old. And so guess what happens? They don't want to tell their parents. And you see suicidality go up. I mean, it's actually genuinely horrible what's happening around the world right now.
Jeffrey, people will look and say, how come you're focused on technology, not media? Because when you started the fund, I think back in 2018, about a third of it was looking at media things. That's your expertise. That's your field that everyone knows you for. What made you think that's not going to be the place where we would have put this money?
I think what we all saw within 2-3 years of that is that digital media, all of the value creation there went to the platforms and not to the content. And so we pivoted out of that now over 4 years ago and really sort of doubled down.
After Quibi.
After Quibi, doubled down on tech as really being the place of opportunity. Having said that, I look at everything. We actually try and keep our eyes and ears open because I do think that there is a next big opportunity that is going to come in media, driven by AI, driven by.
It's still I think it's noteworthy, Jeff, though, that you're that you're totally focused on this right now. To the exclusion of media, I have no idea what to do with media. I'm lost.
But I think that's true of many today. I do
Streaming,
think that it's a very, very challenging, and certainly it's not a growth opportunity. I mean, there are a handful of players that are doing great. I think Iger has done an amazing job turning around.
But the stock hasn't.
Disney and
Stock hasn't done anything.
He'll get there. He's on. This is tortoise in the hare.
I should buy it. You promise?
I would bet on Bob every day of the week. He will get there in the end. And obviously, you look at the tech platforms. Netflix has done a tremendous job. And but it is a very disruptive.
I mean, look at Warner and just look at the value destruct. Look at Paramount, what it was worth a couple of years ago. I mean, it's scary.
You're asking me why I'm not doing it.
No, I'm saying
what did I get wrong?
It's noteworthy that you might like cyber, but I mean, I see why you might be eschewing media.
Yes, but media is going to find a path through this and I am optimistic that. And it's not in front of us today, but I do think in the coming years there are going to be phenomenal opportunities in the media
other than
landscape.
Netflix.
Andrew's got a question too, but very quickly, since you mentioned Paramount, can I just ask what you think about this deal today with Skydance? I know you had looked at that before and thought it was a good idea coming from them. It looks like it's going to be announced in the next few days, according to David Faber and the reporting he's been doing. Yeah,
I mean, it seems like it's on its way to a conclusion here. I think it's now singularly in the hands of Shari Redstone, and decision she needs to make here, and I'm sure it's a difficult and challenging one to listen. You're talking to someone who let go of his baby and sold it 8 years ago, and so this has been in her family for her whole life, and so probably the right thing to do, but we'll see.
Andrew?
Hey, Jeffrey, I wanted to ask you actually about a different chess piece that I think converges with your social media conversation you were having earlier, but also with some of your past as well, which is, would you want to buy, and what do you think of TikTok, and whether that's something that can ultimately get hived off from ByteDance, and who would be the right buyer if not you?
Well, I don't have a spare couple of $100 billion sitting around, Andrew, but were I to have it, I certainly would want to take a look at it. It is an amazing platform, and they continue to do a really interesting job in evolving and growing it. But interestingly, today, I'm actually looking for what the next one is. I mean, when you look at how these platforms have evolved and how content itself just keeps iterating and evolving, you look at movies into television, into sort of all the forms of streaming, that into YouTube into TikTok, and I'm most interested in what's the next thing going to be, and that's where I think generative AI is going to be a huge factor in that, and is going to create an opportunity, a new democratized type of storytelling, and therefore a new platform for it.
The generative AI has raised so many problems in Hollywood, though, because you have the artists and the actors who say, wait a second, you're going to just take my image, my voice, download it, and then you don't need me anymore. And
listen, there's no question, this is shaky, this is shaky territory that do have to navigate our way through, and we've seen incidents here, with Scarlett Johansson, where you can see where this could get away very, very quickly. I try and look at the other side of it, which is we are going to put a set of tools in the hands of creators and artists that is going to democratize content creation, even more than sort of the digital revolution has, I think.
Sujay, why don't you talk a little bit about the other deals that you see that are new ones? You mentioned Aura as one that you've had for a while. What do you see as the targets for where you're going to be putting these new billions of dollars that you've raised?
I think since the beginning of WndrCo, about 2/3 of our investments have been in software. And I don't think that's going to change going forward. Future of work, productivity software, finding products that people can use at work that are basically the things that they would like to use in their personal lives that aren't driven top down but are more bottoms up. Look at what's happening with ChatGPT. The adoption of that in enterprises is wild, and that didn't happen because someone decided that you should be using it. You're using it because that's what you want to use. And I think you're going to see a whole new era of AI-driven productivity tools. We're in the past, we were investors in Airtable and Figma and these kind of great product-led growth companies. And I think you're going to see a whole new generation of those.
You're also investors in Robinhood, or you were investors in Robinhood. We've been talking an awful lot about how meme stocks are back. Retail traders are big and huge. Where do you see that headed? Do you look at other investments in that arena? Do you keep your Robinhood?
You're smarter on this than we are. We have no idea what's going on.
Did you keep Robinhood, or are you still?
No, we didn't, but they've built a great business.
Jeffrey, again, getting back to these issues of the day, I know you said this is in Sherry's hands, that she's going to be deciding what happens with Paramount. You think it's a good deal in terms of what this combination will mean for Hollywood writ large?
Well,
what happens?
Again, David Ellison, is actually an amazing entrepreneur. In his young 40s, he has built a multi-billion-dollar company during maybe one of the most difficult times media has ever seen, right? And so his enthusiasm, his passion for the business is huge, and I wouldn't underestimate that for one moment. I think he's a very, very talented entrepreneur. He's surrounding himself with a talented group of managers, Jeff Zucker, Jeff Shell, just a really, really good group of people. And so I would be actually pretty optimistic of what they can do with those assets.
Jeff, you could buy AMC for a song right now. No, I don't want I don't want it to go away ever.
Yeah, me neither.
And there's debt issues, obviously. I think it's still down 30%.
Yeah.
In the people going, what needs to be done there?
It needs to be reinvented.
How?
There is
Alcohol? I mean, do you need to be able to have a drink when you're there? What's going to do it?
The answer is, there is probably a premium reinvention of that, almost like what happened to sports. If you look at sports 25, 30 years ago and what it was to go to an arena, to the old Yankee Stadium, or what you look at what the investment that they have made in sports and the live experience, how amazing that is today. They've built these spectacular palaces. They have great food, great access to them, all types of events that have turned these things into great successes again. The movie-going experience needs to be reinvented in the same way. That if you go to these theaters out here on the street, it's just not a great thing. And
it's better but we need more Barbieheimer's too, don't we?
We sure do, yes.
How's that
no question.
Well, there was a time when they almost closed down the patent office because everything had been done. Everything's been done. There's no more movies left.
I don't buy.
I don't either.
I don't buy that for a minute. But I do think that you have, an industry that was, very, very much crippled over a long period of time of, the strikes that happened that set things back, and we're just seeing now today what are still the impact of being out of work for 6 months. Movies take 18 months, 2 years to make. And it's a year ago that the business was shut down.
So there's a boom coming in content?
I would hope so. I mean, again, I don't have my
cybersecurity now.
Well, yeah, there you go. I'm trying to protect you and your kids and your parents.
Exactly.
And,
Which we want.
I'm going to let somebody smarter than me go make great movies.
I don't know that exists, but Jeffrey, thank you very much for coming in. Sujay, thank you. We wish you guys all the luck with these new investments. Come back and tell us more when you're looking at that next AI thing that you're getting into, too.
We look forward to it. Thanks for having us.
Thanks for having us.
Thank you.
Next on Squawk Pod, going around the world with Deputy Treasury Secretary Wally Adeyemo. His message to the Chinese, who are critical to the Russian war machine.
You can have a robust economic relationship with the Russians, but for these select goods, we need to stop selling them to them. And if they did that, and if the Chinese said they would stop doing that, Russia wouldn't be able to build the weapons they want for the war they're fighting in Ukraine.
How the Biden administration is working with chief executives from the CNBC CEO Council. Next. Welcome back to Squawk Pod. Here's Andrew Ross Sorkin in Washington, D.C.
Stand Andrew by in 3, 2, 1. Cue Andrew.
just back from his trip to Ukraine. Deputy Treasury Secretary Wally Adeyemo writing in the Financial Times op-ed the following. He says, it's time to step up our efforts to stop Russia's war footing, and that will require manufacturers to scrutinize their supply chains. Secretary Adeyemo joins us this morning. We're here in Washington, D.C. at the CNBC CEO Council Summit. It's great to see you this morning.
Great to see you too, Andrew. Thanks for having me.
So tell us what you really learned on this trip. What was the big takeaway for you?
So arriving in Kyiv, it reminded me of two things. One, of how brave and determined the Ukrainian people are, but secondly, how much of a strategic failure this is for Russia. When you remember in February of 2022, Russia thought they would have Kyiv within days and Ukraine within weeks, but standing there in Kyiv, you recognize that that isn't true and that the Ukrainian people are committed to fighting. And the reason I was there is to commit to them that the U.S. was going to stand beside them as they do that.
Okay, so what do you think needs to happen next?
The most important thing that we need from the U.S. business community and business community across our coalition are two things. One is we need manufacturers, be it microelectronics or machine tools, to step up their compliance efforts, but also to make sure that freight forwarders and their distributors do the same, because what we know is that the Kremlin has asked their intelligence services to find ways around our sanctions. Right. And the second one is for financial institutions who are the big correspondent banking relationships to look at small and medium-sized banks in the countries of concern for us, because we know the Kremlin is not using big banks anymore. They're trying to use these small and medium-sized banks.
Do you believe fundamentally that U.S. manufacturers and U.S. banks are either looking the other way or are complicit in some kind of effort to help the Russians?
No, I think the opposite is true. Every time I talk to a major CEO, they ask me what more can they do. The challenge we have is that the Russians are very good at trying to evade our sanctions, and that we need to do more because they're trying to learn from what we're doing here on our side. So I would say that U.S. CEOs, the ones I've talked to, have been patriotic and often come to me and asked, what else can we do? And I wanted to deliver that message not just to the ones who are calling, but to all of the CEOs across our coalition, that what we need you to do is to pay more attention to your supply chains and also to the banks that you're working with.
Okay. Let's talk about the role of China as a chess piece in the situation in Ukraine, which is what kind of pressure they can bring to bear or not on Russia, and clearly they are not right now. But what kind of pressure do you think should be brought to bear in regard to this situation?
China has the ability to put a great deal of pressure on Russia, because without China, Russia's military-industrialized complex would grind to a halt. Today, the vast majority of the dual-use goods, like machine tools or engine parts that are getting to Russia's military-industrialized complex, are coming from China. What we told the Chinese is, you can have a robust economic relationship with the Russians, but for these select goods, we need to stop selling them to them. And if they did that, and if the Chinese said they would stop doing that, Russia wouldn't be able to build the weapons they want for the war they're fighting in Ukraine.
Both President Biden and former President Trump former President Trump has talked about big tariffs on China. President Biden has also talked about tariffs on China. There was a recent piece where he's interviewed about some of these tariffs in Time magazine. And there is a question mark about how much inflation, what are the inflationary effects of tariffs on China? President Biden says his tariffs are not inflationary, but suggests that former President Trump's, if they were to go into effect, would be inflationary. You're in the middle of this. What do you think?
I think you got to look at the difference in approaches. And there's two fundamental differences in the approach to what the previous administration did and what this administration is doing. We've taken a targeted approach to using tariffs, but we're not doing it just in the United States. We're working with our allies and partners to do it, so that we're actually putting real pressure on the Chinese from all sides. If you look at the statement that G7 just made, that was an important indicator that China's not only going to face tariffs from the United States, but from a collection of countries that want them to play on a level playing field. The second thing that we're doing is we're not doing them in a broad way that would increase taxes for the American people. I saw a recent report that said that an approach that put a 10% tariff across the board would be a $1,500 tax on each American. That's not something the president has done here, because our goal is to make sure that we create a level playing field for American firms and workers, and the best way to do that is not America alone, but America with our allies and partners.
I have a broader sort of domestic question, and it's a political question, which is, some polls suggest that a majority of Americans think we're in a recession right now. Which I would argue to you is misinformation of sorts. But then the question arises why they think that we're in a recession. I'm curious why you think that they may think that, and also to the extent that that's a messaging problem for the administration, why you think you've landed in that spot.
So as you know, Andrew, I don't do the politics. What I do is the economics. And what I know for most Americans is that we've been through a very tough period, not just here in the United States, but around the world with a pandemic. And while we're coming through that and our economy is doing better than any economy, any major economy in the world that is developed, there are still challenges that Americans face. But the thing that gives me confidence that we're making our way through it is 16 million Americans have decided to start small businesses. You don't start a small business if you don't have confidence about your ability to sell the goods and services that you have. We have record low unemployment, but we've still got to do more to make sure that those Americans who are still working to get past a pandemic that was hard have access to the goods, the services they need to make sure they can build the opportunity they want. So my view is that the challenge that the American people are facing is one that has to do with high costs, and we're doing a lot to try and bring those down. From what we're doing on prescription drugs, to advocating building more housing, to making sure that we bring down the cost of the goods they need. So my view is that we got to keep doing what we're doing.
I'm not going to ask you to comment on the Fed, but I am going to ask you to comment, and maybe it goes to the pricing issue, just on inflation broadly. There was a sense that things were getting under control, and now it appears from what we hear from Neil Kashkari and others that they're saying maybe there's a rate hike in the offing, which would suggest that they don't think that inflation's under control. Do you think it's under control?
So as you mentioned, I'm not going to comment on the Fed.
You don't have to comment on the Fed.
But what I will say is that we all know that look at where we started. CPI got to 9.1. It's down to 3-something now. We expect it to continue to come down. But I think for most Americans, they're not paying attention to PCE or CPI. What they're paying attention to is, what does it cost for me to get gas in my car? What does it cost for me to get food? What does it cost for me to get housing? On gas, it was at $5 a barrel in 2022 until we used the Strategic Petroleum Reserve and took actions to bring them down. Now it's about $3.50, so it's come down. On food, while the numbers there have gotten better, I think the most indicative thing is what you've seen Walmart and Target do in terms of starting to cut costs on products in their store, and we hope that more stores will do that. And then on housing, we've got to build more housing in this country, and that's what the president's advocating for us to do, and we expect to see those prices come down too. So we're focused on doing everything we can to bring down costs. We expect that inflation will also come down over time, and will leave to the Fed the decisions they need to make.
We got to run. What was the reaction inside Treasury to the conviction of the former president?
So I was in Germany when I found out, and fundamentally the thing that I was focused on was doing my job and talking to German businesses about the two things I just mentioned to you, getting them to focus on doing everything we can to help the Ukrainian people.
Is there a policy inside Treasury about hiring convicted felons?
I am not going to talk about, I know you're going to try and get me to talk about that. I'm not going to talk about that, but I appreciate you trying.
Wally, thank you for joining us this morning. I appreciate it. It's great to see you.
Good to see you too.
And that is Squawk Pod for today. Thanks for joining us. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. You can tune in weekday mornings on CNBC at 6 Eastern and get the very best of our TV show right into your ears, the best interviews, the jokes, the analysis you need when you follow Squawk Pod wherever you get your podcasts. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.